Hey everyone, so you're thinking about investing in real estate from a distance, right? Well, today we're zeroing in on Kansas City, a market that is absolutely buzzing with opportunity. We're going to break down exactly what you need to know to invest there successfully, even if you're thousands of miles away. Okay, let's just jump right in with the one number that's got every investor's head turning, the median home price in Kansas City proper. It's sitting around $289,000. Now, that's a figure that opens the door for a lot of people. But what does that number really mean in the grand scheme of things? Well, it means this. You're getting serious affordability with a ton of room for growth. That price tag is a full 32% below the national average. Think about that. In a world where coastal cities and Sunbelt markets are just completely overheated, Kansas City is this incredible, compelling alternative. So why is Kansas City getting all this attention right now? It's not just about that affordable price tag. Nope. There's this powerful combination of economic growth and really smart strategic investment that's creating what you might call a perfect storm for real estate investors. And what's really fascinating here is how all these pieces fit together. You've got huge national recognition from names like Zillow and the National Association of Realtors. Then there's the massive $4 billion Panasonic battery plant that's creating thousands of jobs. You've got infrastructure projects like the streetcar expansion just boosting value everywhere it goes. And all of this is happening in a market with a super healthy 6 to 7% vacancy rate, which, let me tell you, is right in that sweet spot for landlords. So this brings us to the single most important question you as a remote investor need to ask yourself. It's not if you should invest in Kansas City, it's how. Your success here really starts by making a clear choice between two very different strategies. Are you trying to maximize your monthly income, or are you trying to maximize your long-term growth? And this chart just lays out the two paths so clearly. On the left, you've got what I call the cash flow crusader. Here, you're buying more affordable B and C class properties. Think solid, older homes that are the backbone of workforce housing. Your whole goal is getting the strongest possible rent-to-price ratio, so you've got income hitting your bank account every single month. On the right, you've got the appreciation architect. You're investing in higher-priced A and B class homes. We're talking newer builds in really premium neighborhoods. You accept lower cash flow up front for the promise of steady, long-term growth in value and, honestly, fewer management headaches. So take a second, look at these two profiles. Which one feels like you? Which one fits your personal financial goals? Are you trying to build an income stream right now, or are you trying to build that long-term wealth? Seriously, your answer to this question is going to dictate exactly where in Kansas City you should be looking. Okay, let's dive into that first path. If you decided, yep, I'm a cash flow crusader, then this is your playbook. We are hunting for neighborhoods with those lower entry prices and really strong, consistent rental demand. In the classic starting point, the place pretty much everyone begins with this strategy is Independence, Missouri. It's just east of downtown, it's this huge suburb, and it's one of the most popular entry points for out-of-state investors for a very good reason. I mean, the numbers really do speak for themselves. You can get into a home for somewhere between $170,000 and $220,000, and that property can rent for up to $1,400 a month. You can just see how that rent-to-price ratio creates real, meaningful cash flow. This is where you make your money work for you month after month. But, of course, there are trade-offs. The housing stock in Independence is older, so you've got to budget for more maintenance. That's just part of the deal. The upside, though, is that the demand is super stable, and it's easy to find comparable properties to make sure you're pricing your rental right. And hey, if this model sounds good to you, you should also be looking at similar neighborhoods like Gladstone, Raytown, and Grandview. All right, let's switch gears and move on to our second path. If you're playing the long game, if you're focused on building wealth through that slow and steady appreciation, then your strategy and the neighborhoods you're targeting are going to look totally different. So let me introduce you to Overland Park, Kansas. This place is consistently ranked as one of the best places to live in the entire Midwest. For investors, it's the premier choice if you prioritize stability, high-quality assets, and, of course, long-term growth. Now, the crucial thing to see here is the price difference. I mean, yes, the entry point is way higher, anywhere from $350,000 to $500,000. And yeah, the rents are higher too, but that initial cash-on-cash return is going to be lower. What you're buying here isn't just a house. You're buying a high-quality asset in a premium location with a really strong track record of consistent appreciation. So what's the big draw for Overland Park? Well, it's the top-tier school districts. That's the secret sauce. They attract high-quality, long-term tenants, which means lower turnover and fewer headaches for you. The downside, obviously, is that higher cost to get in. And if you like this model, other fantastic areas to check out for appreciation are Lee Summit, Brookside, and Waldo. Okay, so now you have the two main playbooks. You know the strategies, but before you make a move, there are a few more critical details, kind of like local quirks about the Kansas City market, that every single remote investor needs to understand. Let's talk about the giant elephant in the room, the 2026 FIFA World Cup. We're talking about an estimated 650,000 visitors about to descend on Kansas City for 6 matches. This is an absolutely massive economic event. So naturally, this leads to the huge question on every investor's mind right now: can you cash in on this with a short-term rental? I mean, it is so tempting to see a gold mine here, especially with nightly rates already starting to creep up. But here's the expert advice, the real talk from people on the ground. You have to view the World Cup as a fantastic bonus, but not the core reason for your investment. A truly solid rental property has to work based on the long-term fundamentals of the market. Period. The real, lasting benefit of the World Cup is going to be the increased national visibility and the economic momentum it gives the entire city for years to come. Now, this slide right here, this is your cheat sheet. It puts everything we've been talking about in one single place. You should probably pause here and really study this. Notice how as you go down the list, the price goes up, and the strategy shifts from pure cash flow at the top with Independence and Raytown to these hybrid markets in the middle like Gladstone and Waldo, and finally to the pure appreciation powerhouses at the bottom like Lee Summit and Overland Park. It's the whole strategy on one screen. And one last crucial detail, you cannot forget that Kansas City sits in 2 different states, and it really matters. The Missouri side is generally seen as more landlord-friendly, with more efficient processes if you need to evict a tenant, and it has those lower entry prices, perfect for the cash flow strategy. The Kansas side, especially Johnson County, is the powerhouse for appreciation, and that's all driven by those incredible schools and rock-solid demand. Okay, we've covered the why, the where, and the what. Now for the most important part, the how. How do you actually pull this off when you're living in another city or even another state? Look, it really comes down to this simple 3-step plan. First, you have to commit to your strategy, cash flow or appreciation. Don't try to chase both at the same time. Second, and this is absolutely non-negotiable for remote investing, you have to build your local team. You need an agent and a property manager on the ground who are your eyes and ears. And third, you have to trust that team to analyze the deals for you. They are going to be the key to your success. So, we've laid it all out. 2 clear paths to success in Kansas City real estate. You've got the cash flow strategy for that monthly income, and you've got the appreciation strategy for building long-term wealth. The only question left is, which path are you going to choose to build your future on?